So today we'll be discussing about how to improve our analysis with index options, and also we'll be discussing about general Q&A with respect to the algorithmic trading, what we're doing. First, I will start with the trend analysis. I'll be going through about the market trend. So for this, I'll be using 1 hour time frame for Nifty to make our analysis better. And this platform is fyers. I'll be using this platform so that we can look into multiple data points. We can look into open interest. We can look into multiple charts. So you can see now what we're seeing here is Nifty is projecting towards the upper side, right? If you look at the price action, so let's say whenever you're looking at the chart, you just look at the price action. This is the basic parameter, right? You look at where the market is headed in the bigger time frame, like 1 hour time frame. So what is happening here is we are seeing that there is a W formation here. So this is creating the upper direction, means the momentum is on the upper side. If you see the previous high or this previous swing of the Nifty, it is around 18,000 level, right? So if you look at this higher time frame, 18,000 level or 18,100 is a zone where we are seeing there is some resistance in the market, right? So this particular zone, we can assume that market has tested multiple times. It faced rejections from this particular level, and also it tried to move back in the month of August. Then it faced rejections. Then again it tried to move back. Again it faced rejections. So now we are heading towards that particular level. So looking at this 1 hour time frame, we can pretty much assume that technically 18,000 to 18,200. It's not specifically 18,000. It's a range of 18,000 to 18,200. We are assuming there is some resistance here. So we may see some consolidation because that market cannot just go in the upper direction in the 1 hour time frame, right? It has to consolidate because it is going in the upper direction. So we will see that the next crucial level for Nifty will be around 18,000 to 18,100. From there, we could see some fall in the Nifty by at least close to 200 to 300 points in the lower direction, right? This is what is we are assuming based upon the trend. So if you look at the bigger time frame, let's say if you look at the 1 day time frame, so what is happening here is if you look here, this is the 1 day time frame of Nifty, and we are seeing here that the market is facing rejections at this particular level, and now we are seeing that it is creating an upward channel, right? It saw a correction in the month of June because of the war. Now we are seeing the market is moving in the upper direction. So let's say this zone, if it breaks this zone in the bigger time frame, that is a 1 day time frame, if it sustains above 18,300 or 400, we could see another fresh rally up to maybe we can assume that it could go up to the next crucial level is 19,000 or 19,500. This is how we project the market based upon technical trend, right? I'm just giving you an overview about how to look at technical. We'll go into deeper about analyzing the institutional data. We'll look into open interest. We'll look into strategies in the coming session. But overall, what we're projecting here is the market is taking support at the higher levels in the 1 day time frame. So if you look at the overall projections of market, right, you can see the same pattern has repeated in the 2021. You saw that the market was in the consolidation phase. It hit a high around 15,300. Again, it tested around 15,200. Then it fell. Then again, it tried to bounce back. So when it broke this particular level, then there was consolidation and a huge rally up to close to 18,000. It was 2,000 points rally, which is close to around 15% move on the upper side. This is what we saw in the last year. So now what we're looking here is the consolidation is happening at a higher level, which is at 18,000 level. So based on this trend, we are assuming that if it sustains in that zone, we could expect the bullish upward momentum in the market. But in the shorter time frame, let's say if you go for 1 hour time frame, we could assume that 18,000 is a intermediate support, intermediate resistance zone. Nifty will face some rejections here because it had a lot of gaps here. You can see there is a gap here, there is a gap here. So these gaps need to be filled, right? Market has to fill this particular gap. So we could see there could be some consolidation at the higher zone. So now let me just come straight to the point about how we can assume that the market is bullish or how we can assume that the market is bearish. So one of the key factor what we look here is we look at a factor which is called the IndiaVIX, right? So IndiaVIX is a very important factor in analyzing the market trends for a longer time frame, right? So let me just go for 1 day time frame on the IndiaVIX, and also I'll be going for the 1 day time frame for Nifty. So let us try to analyze how the VIX plays an important role in analyzing the market trends, especially the overall market trends, and why this is helpful for options traders, especially for trading options, and what are the different areas. Let's say if the VIX is low, how we can define it as a low VIX, and how we can define it as a high VIX, and how we can trade in this particular environment. We'll be discussing about that in this session, right? So you can see in the right side we have the Nifty chart, and we have this VIX, which is the India VIX. So what we're seeing here is this particular index will help you to decide what is the volatility of the market, which can be predicted by using this parameter. You know that in option, price cannot be predicted, but you can predict the volatility and the time decay. So in these options, with the volatility, we can able to predict what is the percentage of move the market could have, and what is the behavior of market, especially with options when the VIX is low. So we usually define that, let's say if VIX is about 20 or 21, we assume that the VIX is moderate. If it is about 25, we can assume VIX is high, right? If let's say if it is below this level, you can see if you go back to the if you go back for the last year, you can see that this is a low VIX environment, right? In this particular zone, this is a low VIX in the range of 15 to 10 to 15, right? In this particular range. So now what we're seeing here is the VIX is falling down. If it consolidates here, then it could be a low VIX environment. This is considered as a high VIX, this is low VIX, and this is the moderate, right? So I hope you are able to follow me. I'm just want to giving an idea in this VIX, because VIX is a very important factor. So in this condition, if you look at the Nifty chart closely, if you look at the 1 day time frame of Nifty, and if you look at the 1 day time frame of VIX, if you look at in the month of October, the VIX was 22.5, right, in the starting of the month. If you look here in this October, the Nifty was around 16,800, which was the low which was created, right? As the VIX is decreasing, the market is going up. So the VIX is inversely proportional to the market trend, especially with Nifty or Bank Nifty. You can take example of Bank Nifty also, right? You can see in the starting of October, this was a low where market has created, and the VIX started to go down because the market is moving higher. So this is very important factor. You need to understand that even in the shorter time frame or even in the bigger time frame, if the VIX is going down or if the VIX is low, that means the market sentiment is bullish. So I'll just make here that VIX has fallen from 22 to 15. So it's around 30%. We can round off to 30%, right? VIX has fallen 30%, and the Nifty has moved up more than, we can assume 5%, right? So if you look at this ratio, right, it is 6 times, means it is 6x. So let's assume if the VIX increases by 1%, right? So let's say if VIX goes up by, let's assume if it goes up by 3%, just for the example, right? So in this example, if the VIX goes up by 3%, so you can just put in the comment box how much percent the Nifty could fall. So here the Nifty will fall by just 0.5%. I hope you are able to get this point, right? This is very essential for you to understand how the market structure is being designed, and why it's essential for you to understand the behavior of VIX, right? If the VIX goes up by 2% or 3%, then how much the market could fall? If it goes down by, let's say that if the VIX again drops back by, let's assume 6%. If it drops back by 6%, then the Nifty could move another 1% upside. 18,000 level, it will go up to 1% from the current value, which will be around 18,000 level, right? So this is how the VIX is being structured. I hope you're able to get this point, and this is just an assumption that if the VIX drops, the market will be rallying. Thank you for watching this video, and please do check out the links in descriptions to know more about this product.